Okay, so beginning of February, I entered RCL on the 312 week, but I had no idea what I was doing. Perfect. So when it bounced, I got shaken out. Now I hit the bottom of the range, and I see it had a 312 month. Give me a mini breakdown if this was a good trade. All right, perfect. So RCL on the month, yeah, we'll have the 312, which we know is a short below this to take these guys out, maybe further. We go on the week, 312 down. Yeah, so the way this works is since we had this mother bar, you just have to be aware of that, right? You're trading within a mother bar. Now, as far as the swing trade is concerned, if that weekly doesn't reverse, it's still trying to take this out, the magnitude. So this is the most important part, in my opinion, of understanding how the strat works. If we have a target, let's say we have a 322, we already know the 2-2 reversal magnitude, or target, is always this. If it doesn't reverse. So given that we don't take the highs of this out and we continue to make lower highs, it's got to be going to take out this. No matter how many bars it takes, doesn't matter. The other thing that's true is we will stop people out on the way down. So let's say we get a signal and it goes, and we have the slight 2 up, but then it goes red here. It's still trying to go down here. So if we have a 2 in our favor to take this out, or a 2 up and red in our favor to take this out, it's still trying to do what this signal was doing. So when we go back to RCL, this went 2 on the week. It was not in force, so we can't say it was going to the target unless it was below this. Then it goes 2 again below this. And you can see for all week below that, it's in force. It's trying to take this stuff out still. Then it ticks down and goes green. When that goes green, it changes what's occurring. Now, is it anywhere near reversing the week up here? It is not. Then it closes out. When this occurs, the new month opens. So this is new monthly open. It opens, goes 2 up. This is where you'd reduce if you're short from in here. You'd reduce it maybe, or you'd have your stop break even to these guys. Then it goes red here. The second that goes red, you can go after it short again because it's a potential outside bar to take this stuff out. And if it goes 2 up, go 3 to go outside bar and take this, what does that do to the month? That will trigger the month. So as far as then we drop it down on the day. If we know on the week, once this gets taken out, when it's 2 up day, it's not doing it right now. But then we have this. It goes 2 down, giving control to the sellers. Down they go. Then you'll see they open the new month here on Monday. They tick up, inside bar up. Then it goes red here. That's your rev strat. This is how we'd enter it. Right here, when this goes red, you can put your stop against the highs, or you could do it slightly tighter. But let's just say this is your trade. Now, since you have a monthly signal, this is how you get in. And I want to change this so it's a little easier to see your stuff here. So we already have the monthly signal going. And then since this trade works, 2, 1, this is where you add 2 down. And you'd add to it. And since you already have a winning trade, when you add to it, if you, let's say you put your stop slightly wider. If it stops you out here, you get out of the whole position for a gain. If it doesn't, you hold the whole position and double your profits when this moves again. You'd see as the form of a measured move. It goes 20, and it goes about another 20. So the inside bar add to the 2-2 reversal rev strat on a Tuesday. Does that make sense? The biggest thing is when we are, and I don't want to talk over too quick. So just to make it even more clear, it's like if we have a 2 up in red, it's trying to do this and go 3. If we have a 2-2 reversal, it is trying to go 3. Same thing, it's just 2 bars instead of 1. Now, when we line it up, the entry is, we want to use the day and 60 to get in. But when we line this type of stuff up across multiple time frames, what we can say is, okay, this is our broadening formation. Then we set up our signal. If this works, we're going to take all this out. So if this is a daily and we go and take this out, does that trigger the monthly signal, or does that trigger a week? Does it cause an outside week? Does it trigger a quarterly signal? Does it change continuity? What happens when that works? Because we know if this sets up, it's always going to try and do that. If this is a daily, what does it do to the big time frames? So we go to RCL, and this goes inside bar, 2 up in red right here. What's that trying to do? Be trying to kick into this broadening formation. New low, new high. If that works, we go down here. That will always try and trigger the monthly signal every time. This is last month's lows. It's always going to try and trigger that. So we can use this to trigger it. And if you don't like drawing the broadening formations, you go on the week. This is the previous week's range. When this goes 2 up in red, it's a 2 up in red week, potential outside week. So take this out. It's the same thing. And then it happens, and you get that outside bar. Now we want signals to get out of that, because once we're out of the bottom of it, then it starts really cratering. So the same thing's true. Like we go to Verizon today on the upside. Here's the 2 down in green. If that works, where's it going to go? Up there. When that breaks 2-2 reversal, it's going up there. When it goes 2 up again, it's still going up there. Then it gets out of that. This is where things really start taking off above this. They expand another 3%. So what we want to do is we want to start at the month. We want to say, okay, here's my monthly signal. Can I have signals to trigger that? Or do I have signals that reconfirm it? So we go to the week. This is a 2 down in green week. Where's that going? Up there. Is that last month's highs? It is. So here's our 2-2 week. We're in. Right there above this, 40.31. Our stop is this, 39.85. Risking 49 cents. If it doesn't reverse, or it's a 2 down in green in our favor, we can hold it. It goes all the way up in here. There's 9%. When it ticks down here, that's your first reason to get out. But then it goes green again, you can get more again. And this is where the 2-2 day occurs. It goes green on the week, then the 2-2, boom, back in the direction of the month. So when we look at big time frames, if this is a monthly chart, so let's say we have the broadening formation. This is our monthly chart. Anytime the month looks like this, right, and it's still 2s down, we look for what on the daily? We're going to look for this exact same thing on the day. So if this is the month, open another one. And I got more examples. This is like so important, so I'm just going to try and nail it in your head here. So if this is the monthly chart, what if the day, so like let's say the month ticks down, it goes slightly green, starts coming back a little bit. So on the daily, it might look like this. So initially it ticks down, then the new month opens, it goes green, starts coming back. Then it looks like this. So here's our triangle. So if the day looks like this, the month looks like this. What happens when the new month opens? Then we start going back red. It's still trying to do this. Take this all out. So if the new month opens, or we can change that month to red, this 2-2 day occurs, boom, it's going to take that out every time. That's what it's trying to do. Then if the month is red, it can keep going, and this range will expand in the direction of higher time frame continuity, or that color. So if we can gauge the magnitude and say, hey, this is going way down there, then this daily makes more sense to take, because if it works, it's really going to go. And that's the position you want to be in. You want to be in trades where if this goes 2-2 and hits its target, it's really going to go. It's going to keep going. So let me show you some examples of that. Dixie. I give out the higher time frame analysis because then you can go and do this. And that's also, you know, when we are talking about setups, it'll be like the month broke, the week broke, this, that. You don't have to get in there right away. You can, but you can wait for exactly what I've shown you. So let me show you this. So Dixie, you can see we have a 2-2 month. Where's that going if it doesn't reverse? Meaning no higher highs. It's going to go there. It has to. That's how it works. So you should be extremely confident. You get a reversal, you can gauge the magnitude, you know what's happening. Never want to second guess, because we know. Then we go to the year. If that monthly doesn't reverse, what's this year going to do? Going to go outside. That's what gives us the confidence. Because we have the potential outside year. This 2-2 month is going to cause that. So if we know that, then when we go and take a look at the chart, right, it hasn't hit target yet. Maybe it doesn't, but we can still make money doing this. When we go to the day, how do you get in on that? You let them stop people out, and then you take reversals back in that direction. So the whole way down, you're going to see the initial, they stop them out in here, and then reversals down. Then they get stuck in the middle, form a new broadening formation. Then they expand it, down they go. And you're going to see not every single one of these is going to be perfect, but inside, slight higher highs, the reversal here, boom. And then notice they fail to expand it. So what do? Higher highs again, reversal here, boom, expansion, boom, keeps going. So what we want to do is get in there, take a short, make some money. Reverses, get out. Get in here, 3-2 expansion, make some money. Reverses here, get out. reversal here, get in, make some money, reverses in here, get out. 2-2 back up, 2-2 here, get in, make a ton of money, still hasn't reversed to make it even more. Tons of it. Just layer it on, right? So that's what we want to do.